Good evening, everyone. Time for this week's silver update. I want to start out with the gold chart. It's got the primary trend line here that actually goes all the way back to the bottom that we put in back in October of 2008, which was the pinnacle of the financial crisis where everything turned around. Ultimately, stocks turned around later in the spring. Now, if you remember on the silver chart, we actually had the silver blast off around the announcement of QE2 right here in August of that year. It doesn't really show on the gold chart, but when we look at the silver chart, you'll see it. But what really stands out here is this trend line is consistent and has not been violated by this most recent move. The second trend line is a further rising line off of that also, well, it's been penetrated, but it really hasn't been violated. We'll see if gold turns around and goes down. I have strong doubts as to whether it will. You can see that we've corrected from the largest MACD that we've ever seen on the daily at roughly 70, and we're down to negative 44 on the MACD. Now this is far lower of a reset than we had in the 2008 plunge to this bottom. You can see we only hit about 32, and on this one we only hit about 36, 35 or so. So we've already had a much larger correction as far as the MACD is concerned, but we're still within the rising trend line. You can see by this gigantic red area that's just starting to turn up now. So I'm still going to stick with my projection that the bottom is in for silver and gold. We'll have to wait and see if I'm right. I think if it is in, we're going to see a follow through that's going to look something like this when we finally do take off to the upside. Now, the silver chart, as I mentioned, does not have the same sort of pattern. The long-term trend line that begins at the same place actually goes like this. So we've come close to the long-term trend line but haven't met it. The other trend line that began at the beginning of QE2 has clearly been violated by this down move, and of course that's where I based my projection, also based on Clive Mond's article, that we would get a breakdown. So you can see that silver obviously ran ahead. If we would draw a trend line that would be something that is parallel to what happened in gold, your trend line would look something like maybe in here, I'm not really sure, something like that. So you can see that silver was lagging gold for a long time and then obviously just took off to the upside and went way beyond gold as far as a percentage return, but then corrected violently in May and then rallied again and corrected violently again. So the silver MACD is down here at an incredible negative 2.8. You can see the top we reached was about a positive 3, so we're almost down to a corresponding low as the high that we reached. Obviously nothing back here even rivaled what we're looking at. Even the May Smackdown doesn't rival what we're looking at here. So we're looking for a bounce in the MACD, probably a pretty violent one, and I'm expecting a similar move here in the price, something like that. We'll see if that pans out. It may or may not. I'm still going to hold with my projection. I think I'm holding with the $100 by the end of the year or beginning of next year projection. I believe that a number of others are holding to that projection. I think Bix Weir is, and there's some that are saying 100 by next spring. So I think we're probably going to get one of the biggest bounces we've ever seen in price. So for those of you that are stacking, it's still a wonderful time to get in. I just received my silver elephants today, and it is a beautiful coin. This picture actually doesn't do it justice. It is, in my opinion, a flawless coin, front and back. It's really a beautiful coin. It has the elephants on the front and it has that seal on the back. So I'm really excited about this coin. I'm delighted to be able to get this coin for $32.70 or so, the price I got it at. I don't expect these coins to ever make an appearance again on APMEX. Maybe they will, but if they do, they'll probably be grabbed up really fast. So I was a little bit worried because some other people who had bought them said they were kind of like a round. They weren't really like a numismatic coin such as the ones that you find at the RCM or at the Perth or even the American Eagles. But I'm actually very impressed with these coins. They don't come to quite the level of, say, the Silver Taku, the last one I bought, or some of the Perth ones, but they're very, very close. They're far superior to a normal round, and I expect them to do tremendously well in the numismatic market. So I'm delighted to get these coins. Whoever grabbed up the last 500, those got snapped up really quick. I think that you got a deal on those, and you didn't go wrong with that. Now, is there a possibility that we go lower? Yes, I think the possibility still exists that this area here could be tested. That's our last really big support area, and that goes all the way back to the 2008 top that we hit. This is actually the March top. This is the Bear Stearns top. The reason why this top is very significant for silver is because if you remember when that happened, Jason Hommel sent out his alert at this time. That was the Bear Stearns weekend, and the physical silver supplies pretty much evaporated at that point, and Bear Stearns, who was the primary silver short, went bankrupt, and the Federal Reserve divvied up their assets, and most speculate that they forced JP Morgan to take the silver shorts that Bear Stearns had. A lot of people have speculated that it actually was the price of silver that finished off Bear Stearns. We probably may never know whether that's the case. Anyway, so that was our last big point where silver intersected with the financial markets, and this is a very key point because it was the beginning of this financial collapse. So I recognize, although very few others recognize, that silver was key in precipitating the financial collapse that we had. Will it be key this time? We'll have to wait and see. So the next big support line is right down here at about 21 or 21 and a half. So if we get there, there's a possibility that we will. Obviously the MACD is going to be incredibly oversold at that point, but if we do get down to that point, you will have an incredible buying opportunity. I will expect that if that does happen, there will be virtually no silver available anywhere at that price, and probably the premiums will expand so that even though the price may at some point touch down to around here, you probably can only get silver for about 27. They'll put a $5 and $6 and even $7 premium on it. So let's get over to the main article that I wanted to cover tonight, and that is an article by Ryan Jordan. It's on Financial Sense, and it's called Peak Silver, and this is a idea that's been bounced about a lot recently, but this is a fairly good article in fleshing it out. Now, you've heard a lot about peak oil, and the idea is that the consumption of oil is continuously rising and the supplies of oil are depleting, especially the gigantic oil fields in the Middle East that have been continuously had oil pumped out of them for the last 20 and 30 years, Anwar and all these others, and they're running out of oil. And so there's this projection that at some point the amount of oil being pulled out of the ground is going to slowly decrease, while the amount of oil being used is going to continue to grow, and that will reach a critical situation where the world is going to essentially run out of oil, or the price is going to go extremely high. Now, I don't necessarily buy into that theory. One of the reasons is because if you listen to Pastor Lindsey Williams, his Oil Non-Crisis series, he talks about a lot of the capped wells that are in America, North America, also the shale sands, and primarily I don't necessarily buy into, I have a suspended opinion about whether or not oil is really a renewable resource. I don't think the scientists really understand where oil comes from. Some say that it is from fossilization of plant and animal life. Others say that it's being renewed on a regular basis. There's a chance, in my mind, that it's possible that oil is actually a renewable resource. They've made oil in labs by compressing organic material and other things like that. So I'm not completely convinced yet that oil is a non-renewable resource. But I can tell you this, silver is a non-renewable resource. There is no possibility that the silver that's in the Earth's crust is increasing in any way. I can't say the same about oil. So let's take a look at this Peak Silver article because it's fairly interesting. He makes some very interesting points. I'm going to skip around a little bit because it's a very long article. So he says, so even though we can't say if gold is peaked, we may be at peak production for quite some time, perhaps a very long time. For example, in the case of silver, estimates are that for most of the 17th and 18th centuries, silver production stagnated and at many points actually declined. Yes, eventually silver production turned up again, but only after several generations of Europeans had to live with no growth in silver mining. These people during the course of their lives experienced peak silver. There are several reasons to be concerned about the possibility of some sort of peak or decline in silver production in the future. Here are just a few of the areas of concern, whether or not these factors will turn out to produce peak silver. Now he talks about energy return on investment and declining ore grades. And this is a topic that I've addressed, especially the return, because you know that the prices of energy continue to rise, but the price of silver really doesn't rise in the same percentages. It has just recently when it went near 50, but now it's crashed back down. So we're presented with the same problem again, that it's just not that profitable to move that much earth to get the amount of silver that you're getting. And I think I've covered in past videos exactly how many tons of earth you have to move for 1 ounce of silver, and it's very surprising how much you have to. But he also talks about declining ore grades, and that's a very important point that Jason Hommel and others have pointed out. I think it was Ted Butler who pointed out, and Bix Weir as well, that silver, because it is a lighter metal, it's actually roughly half the atomic weight of gold, that they have found that many of the deposits, of the large silver deposits, are higher up in the Earth's crust than the gold and the other metals. So what that means is that silver is more likely to have the best ore deposits already have been found. If you remember, there was the Comstock lode that was found in the 19th century in Nevada, and that was a tremendous supply of silver that ended up impacting the price of silver and ultimately having something to do with the demonetization of silver because of the oversupply. But anyway, he talks about that. He also talks about the lack of new mine discoveries. He says, according to Dierderin, new mine deposit discoveries peaked at some point in the mid-1980s, with average annual discoveries in his estimation having declined over 60% since then. So they're not making new discoveries. The number of new discoveries is declining. Dierderin believes that large new discoveries of metals are unlikely. This is a situation similar to oil, where the world has failed to find another Saudi Arabia in terms of reserves. The lack of new mine deposits leads people to question for how much longer silver mine production can increase, if we were simply trying to extract more silver from the same locations that have produced silver in some cases for nearly 500 years, Mexico and Bolivia. And if you remember, when the Spanish invaded that area, they had been mining gold and silver, and they were so abundant that it was shocking to the Spanish explorers. But much of that mining, the point is that much of that mining has been going on for 500, possibly even thousands of years. That mining was going on there. Silver production is held hostage to the prices of copper, zinc, lead, and gold. Now, I pointed that out in a video I did on the base metals just recently, and that's very important because as those base metal stockpiles increase, that's less of an incentive to mine them, and that means there's less silver mined as a byproduct. He says only about 20 or 30% of silver comes from primary silver production. In fact, for many years, the world's largest silver mining company has been BHP Billiton, which mainly mines alumina and other base metals and oil and gas. In terms of percentages, roughly 25% of silver production comes from copper and over 35% from lead and zinc. The rest, roughly 10 to 15%, comes from gold. The fact that silver is held hostage to the prices of other metals influenced mine production in 2008. During this global recession, primary silver production rose much faster than silver produced as a byproduct, even as mine supply did increase over 2.5%. So that's really important, because if the prices, and he says here, if there's a huge surge in silver bullion purchases during the deflationary depression, when base metal prices collapsed, it might be difficult to increase silver mine supply to meet demand. So this, again, I've pointed out in my Office series about the inelasticity of both supply and demand in silver, and it's a unique metal in that regard. He talks about anemic silver reserve growth estimates. I'm not going to talk a lot about silver reserves because I think most of the numbers are fake, so I don't really even believe that the reserves are there anymore. I think most of it's been used up. The Andean countries, the Saudi Arabias of silver. The USGS reserve data for silver is subjective and relies on numerous sources and guesses from around the world. Still, I'm amazed by how concentrated the reserve increases are by country. Also note that reserves are different from the reserve base, an even more subjective number discontinued recently by the USGS. Between 2005 and 2010, only 3 countries accounted for 70% of the 240,000 ton increase in global silver reserves. Those 3 countries were Peru, with an increase in 84,000 tons, Chile, which increased 70,000 tons, and Bolivia, 18,000 ton increase. Of significance, Mexico, once a leader in silver production, saw 0 increase in reserves from 2005 to 2010. And the United States, also a one-time leader in silver production, has actually seen its reserves decline from 31,000 tons in 1995 to 25,000 tons today. Now, I don't believe that one at all. I think the reserves were much higher then, and they're close to 0 now. So, another excellent point. Peak growth rate in silver mine production per 100-year time frame. Many economic historians believe that the peak growth rate in silver mine production occurred way back in the 1500s with the Spanish conquests of Mexico and Peru. Mine production leapt up at least 15 times from 1 to 15 million ounces, or roughly 12% annual growth in mining over the course of that century. This growth rate was even higher than between 1860 and 1940. When mine production increased from under 35 million ounces to over 275 million ounces, or an 8% annual increase in mine production. Since 1940, increase in mine production have fallen off dramatically to between 2 and 4% per year. The other amazing point about New World silver discoveries is that some 500 years later, Mexico, Peru, and Bolivia are almost always among the top 2 silver producers in the world. peak ratio of annual silver to gold production in terms of silver's abundance. According to monetary historians, the peak in silver to gold mine ratio did not happen in the 1500s, although it was still high, around 25 to 1, but rather came during silver's industrial revolution from roughly 1885 to 1930. It reached a peak of nearly 40 to 1 around 1890 and was still as high as 30 to 1 in 1930. According to Roy Jastrom, there was a massive surplus of silver in the United States for industrial use in the early 1930s, a difference of 5 times. We have never experienced this kind of silver surplus or this large an amount of mined silver to gold since. Currently, the production ratio of silver to gold is roughly 9 to 1, although this is not as low as the 5 to 1 ratio seen in the 1950s. And I don't need to tell you that the surplus in silver production is only a fraction of what it was in the 30s. He talks about peak ratio of silver to world population. Obviously, silver is shrinking while the population is growing. He talks about, again, the byproduct, how it's not being mined as a primary. Now, that could change. Obviously, if silver were $500 an ounce, there would be a lot more primary production. But because silver is so undervalued, that exploration isn't happening because it's just simply not profitable. And the last point is the peak amount of silver held at futures exchanges. Another way of thinking about peak silver is to ask about silver supplies at the major futures exchanges. The amount of silver under the control of the 3 largest futures exchanges, the COMEX, the Chicago Board of Trade, and the London Metal Exchange, and the Tokyo Metals Exchange, peaked at 350 million ounces in 1992, with the vast majority, nearly 280 million, being at the COMEX. Today, the number has declined to below 150 million ounces. As of 2011, the London Metal Exchange also no longer offers silver futures trading. Today's number is lower than 1972. By the way, even though there are many more ounces of paper silver trading than in 1972, not long after silver futures trading was legalized by the U.S. and British governments in 1964 and 1968, respectively. So, while we may not have achieved peak silver, the white metal is by no means abundant, and I still don't think that most people appreciate its rarity. I couldn't agree more. I think the last estimates I read were that at current rates and current prices, 20 years is all that's left of all the silver, and then it's gone. So in the next 20 years, clearly something very dramatic has to happen. Either a replacement has to be found, or the price of silver has to literally explode. So that's what we're projecting. We're still projecting an explosion in the silver price that will actually surpass this move, which probably the Elliott waivers will say this is the A, and this is the B, and this will be the C, which will be probably 2 to 3 times the size of this move, and that's where I get my projection for $100 by the end of the year. And we'll talk to you next time.